Good morning, everyone. Jerry Detweiler here from NAV, and I want to talk about the latest guidance that just came out from the Small Business Administration for the new PPP loans. So the SBA on January 6th in the evening released the latest guidance for the new PPP loans. We don't have an announced date yet to apply, but everything we're hearing seems to indicate that by Monday, today's Friday, by Monday, the SBA will begin to open the portal. So I want you to get as prepared as possible and take advantage of these loans if it may be a good fit for you. So let's jump right into our presentation and talk about what we know about these PPP loans. Now, I do want to emphasize that I am not an attorney. I'm not an accountant. I'm not your financial professional. So when in doubt, make sure you consult your advisors. In addition, just as last time with the first round of PPP and the second round, the SBA will issue additional guidance. In fact, they just mentioned that in the new guidance that they just put out, that there will be more guidance coming. So you are allowed to rely on the current guidance as released at the time that you apply or the time you apply for forgiveness. But of course, you definitely want to check with your financial advisors. So let's recap the situation here, what we've got. And the good news is this legislation definitely confirmed our understanding of the three types of PPP loans that will be available and how you qualify for them. So I'm really glad that we have this clear guidance now from the SBA on this topic. So the first type of PPP loan is for a first-time borrower. So if you never got a PPP loan, then this would be the category you fall under, and you apply under the same terms as the first round of PPP in the CARES Act. So it's a little bit different, and I'll explain that more in detail in just a moment. The second one is if you already got a PPP loan, then you can apply for a second draw or second PPP loan if you qualify. And then finally, there's makeup funding. So we heard from borrowers during the first round where they maybe didn't understand how to qualify and they didn't ask for as much money as they could have, or they kind of got freaked out by all the news about PPP loan audits and they returned their PPP loan. Well, you can actually go back and request that funding now. So hopefully that will be helpful to you. One thing I want to emphasize for everybody is that your business must have been operational by February 15th, 2020. We are getting a lot of questions from people who were sort of ready to start in the first quarter of 2020. They couldn't open because of COVID and they want to know what's available to you. The guidance is very clear. And if you were open then, but you weren't making any money, it's going to be very difficult to qualify. I'm going to be honest with you. So there might be other programs that might be a better fit for you. But keep in mind that you generally, you must be in business by February 15, 2020. I did notice in the guidance that there was a little hedging there. They said on or around February 15th. So if you open February 20th, maybe you can get under the qualifications. I don't know how the lender is going to handle it. Oh, wait, I want to back up a second. I also want to emphasize that we are updating our information almost on a daily basis at this point on the NAV blog. So nav.com/PPP, lowercase, nav.com/PPP. Check that article out. We update it frequently and we always put at the top the date it's been updated so you can see if there's new information there. Also, if you are on Facebook, join our Facebook group because a lot of business owners are talking about new information and they're bringing new information to us that can be very helpful. So that Facebook group is really helpful for you to stay in touch with. All right, so what we're going to cover today, we're going to talk about who's eligible, how much you can get, how do you calculate this reduction in revenue? We've got more information that I think will be helpful to you. How do you spend the money? When can you get one of these loans? What else do you need to know? And what can you do right now? You can ask your questions and I will do my best to answer those as well. All right, so let's talk about those requirements. The CARES Act, this is the law that passed back in March 27th of 2020 that created the PPP loan program as part of the small business SBA loan portfolio. This requires that you must be a small business, and that generally means you qualify under the SBA size standards for your industry. This law did say you have to be 500 or fewer employees, and it also allowed nonprofit organizations to get into the mix, which previously, typically with an SBA loan, you can't be a nonprofit, but they did allow nonprofits, including churches, to be part of this program. Now, they also specified that you could be self-employed as a sole proprietor, an independent contractor. Yes, gig workers may qualify for a PPP loan. So that's also in there. And then they expanded the eligibility with this new latest legislation, and that includes certain news organizations, destination marketing organizations, your chambers of commerce, housing cooperatives, etc. So I'm not going to spend a lot of time on those specific groups, but if you fall under those categories, you may be eligible for a PPP loan now. Now, if you're going to get a first-time PPP loan, you have to meet those qualifications. Second-time PPP loans or second draw loans, they add some additional qualifications. So here they're trying to offer more money to the hardest hit businesses. So you have to meet those first requirements, but you also cannot have more than 300 employees, although businesses may qualify for may qualify on a per location basis. And then you have to have had at least a 25% reduction in revenues. We're going to talk about this in more detail in a moment because we do have more information from the SBA on this. And then they also specified in the guidance that you have to spend your first PPP on eligible expenses before your second loan is dispersed. Now, I realize this is going to be confusing and a little bit problematic for a few borrowers, but I think most of you will probably not have a problem with this because the last round of PPP closed August 8th. And I don't think lenders took applications after around August 3rd. So that means that if you had the maximum period to spend those funds of 24 weeks, then you probably are just finishing up the spending of that funds in January. Let's say you just got one at the very end, you have the 24 weeks. By the end of January, those funds should have been spent. You might have already spent them. What I read into this in the guidance is that they're really trying to make sure that borrowers spent the money on what you were supposed to spend it on and not just taking it as a low interest rate loan and, dragging it out as a low interest rate 1% 5-year loan. We'll get more into detail about what you can spend the funds on, but just keep in mind that is a requirement that is spelled out in the guidance. All right, so how much can you get? In the first round, the maximum loan is $10 million. In the second draw loans, the maximum is $2 million. You can only get one second draw loan. Now, you basically qualify based on payroll. If you're self-employed, I'll talk to you in just a second, so hold on. So you're looking at your average monthly payroll costs, which include compensation up to $100,000 annually, plus other things like vision or dental or group benefits for your employees and other eligible payroll-related expenses. If you are in a business that's in the hospitality, food and accommodations industry, which is basically of a NAICS code, N-A-I-C-S code of 72, that starts in 72, and this would have had to have been on last year's tax return, then you can actually qualify for, on a second draw loan, not on a first draw loan, on a second draw loan, you can get 3.5 times average monthly payroll. Now, the guidance gave us a little bit more leeway here because the CARES Act, of course, became law at the beginning of, the first quarter of 2020. Now we're into 2021. So they said you can either use the 1 year period before the loan is made. So, let's say January 15th, 1 year period before then, or you can use the average gross monthly payroll for all of 2019 or 2020 and multiply by 2.5. This is your choice. So you will want to pick a time period that maximizes the loan you can get, with the caveat that I know that some of you don't have your bookkeeping done for 2020. And so you may find 2019 is just the easier route for you to go. In addition, a lot of businesses, if you were in business all of 2019, then you might have had more payroll in 2019. 2020 was a rough year for you, you had less payroll. So it might be better to base it on 2018 again. But again, you're going to have to determine which time period is better for you. Now, if you're a seasonal business, if you have other scenarios, there's some alternative calculations. Self-employed. So if you're self-employed with no employees, you are going to go off of your Schedule C. This is the form that goes with your 1040 form that you file with the IRS that says how much money your business made, your self-employment. So this could be you're an Uber driver, you have a side hustle, you are just a full-time independent 1099 contractor. You all may qualify. And again, you can use either that Schedule C, it's line 31, net profit, or you can use the 2020 Schedule C to calculate your either 2.5 for a first-time loan, or for a second-time loan, it's 3.5 if you are in the food, service, and accommodations industry, restaurant, caterer, something like that, etc. All right, so what is payroll? It's very important to understand what payroll is, because this is where some borrowers did not get the full amount the last time that they applied, because they didn't understand. Remember, if you pay yourself in your business, you are part of that payroll, even if it's not formal payroll. So even if you don't write yourself a check as a payroll check, then that's okay. You may still qualify. So it's compensation up to $100,000 annually, cash tips or equivalents, which can be estimated. I won't read through all of this slide. This is also in the article as well. Group benefits may qualify as well. If you are, if you're an owner operator and you have a situation where, like, you're an S Corp and you have owner's draw plus distributions, if you're a partnership, an LLC, taxed as an S Corp, there's some other alternatives. And we did write about this in the previous round of PPP. And we linked to that article in the article that that I pointed to, nav.com/PPP, so you can get more information. So there is guidance for different types of situations that is available. I'm just not going to go into great detail for each of those situations. Now, the second thing is, if you're going for a second draw loan, so you're getting your second PPP loan and you need to calculate that 25% reduction in revenues, how do you do that? Well, the language in the legislation is gross receipts. And the way it's described is you compare that for any quarter in 2020 to the same quarter in 2019. So you can pick a quarter. It's not that you need the largest reduction in revenue. You just have to meet that 25%. So any quarter in 2020 compared to 2019, where you had a 25% reduction in revenue, qualifies you for this. Again, the SBA is trying to make this second round available to businesses that were hardest hit by the coronavirus crisis. Now, the guidance also says you can compare all of 2020 to all of 2019. So if you're self-employed and you're like, I don't have the documentation for every quarter to compare, if you can compare 2020 to 2019, you have a 25% reduction in revenues, great, you may qualify. All right, there are additional calculations for newer businesses or seasonal businesses and partnerships, and you will see that at nav.com/PPP. So one question we've gotten frequently is, does it have to be a calendar quarter? Because some of you may operate your business on a fiscal year where you have different quarters. The SBA guidance was not clear on this. My gut instinct is telling me they will be flexible on this, because not all businesses run on a calendar year basis. But what I don't think it will be is, I don't think it'll be a situation where you just pick any 3 months and you pick the 3-month period that's best for you. I think it's going to be based on how you file your taxes. But at the moment, all I can say is they did not clarify this question, and it appears to be calendar quarter at this point. All right, so now you're asking, well, what are my gross receipts for this? I have to calculate 25%. What is the gross receipts? Well, they decided to use the same definition that they use in the Small Business Act. The Small Business Act is the law that made the SBA loan program, among other things. And so when you qualify for an SBA loan, you have to qualify based on size standards, and you have to be a small business based on their size standards. And part of that involves the revenues or the gross receipts for the business. So they spell out the definition in the guidance coming straight from the Small Business Act, and that's easy to look up, but it's also in my article as well, so you can find it there. Now, here's the thing I want to point out here. It says received or accrued. And I can tell you that we've gotten a lot of questions from people who are saying, well, you know, I may have invoiced, but then I didn't necessarily receive that money. Now, this part is, now remember, this part is for the 25% revenue reduction that we're talking about. And it looks like it can be received or accrued depending on the accounting method that your business uses. So you might need to talk to your accountant to clarify this. But again, remember, you're just trying to be able to qualify based on the revenue reduction. The amount is, as long as you meet that 25% threshold in any quarter, you're okay. All right, now do not include a forgiven PPP loan in your gross receipts. The guidance did not mention the EIDL grant, so I cannot advise you one way or the other on that. Now, some of you are going to say, well, my PPP loan hasn't been forgiven. And that's probably the case with many of you because not that many PPP loans have actually been officially forgiven yet. So that's probably okay because generally it's a loan until it's forgiven. And generally a loan would not be in that gross receipts calculations. Obviously, talk to your accountant, but a loan typically would not be part of that gross receipts calculation. It's a loan. And then when it's forgiven, that's when it's sort of income to your business. And the SBA is saying don't include it. So I don't think you should have to worry about that at all. All right, how do you document this 25% reduction in revenue? In other words, how do you prove it? Well, the guidance says that for loans of less than $150,000, you don't have to do it when you apply. You can wait until the time of forgiveness to document it. But if you're going to get a loan of $150,000 or more, you will need to provide the documentation when you apply. And what they mention in the guidance is relevant tax forms, including your annual tax filings, or if that's not available, copy of quarterly income statements or bank statements. So those, I'm anticipating for any self-employed people, it's just going to be the Schedule C on your tax return. And that's going to be an issue we're going to talk about in just a second. All right. Again, I just want to emphasize that if you are operating a business with an NAICS code beginning in 72, so this is the North American Industrial Classification System code. It's a code that generally identifies the type of business that you're in. The guidance says this should have been how you filed your taxes previously. If it begins with 72, you get the 3.5 times average monthly payroll cost. And again, you can use 2019 or 2020 to qualify. I've talked a lot about 2020. This is my biggest concern with this round. Remember, the first round of PPP came at March 27th of 2020. And at that time, Congress had extended the time to file tax returns for your business and personal tax returns. And we had so many business owners who were just caught flat-footed because they could not figure it out. They hadn't done their bookkeeping, their accountant hadn't done their bookkeeping, whatever it was, they were behind. And I've been hammering this point home ever since, how important it is to stay up on your bookkeeping. And now here we go again. And this time we're not a quarter into the year. We are a few days into the year. And we're talking about potentially needing 2020 information. If you are applying for EIDL, I also recommend you have your bookkeeping up to date. So if you can do anything right now, and I hate to say spend the weekend catching up on your bookkeeping, but if you're anxious to apply for these loans and you're behind, you do your own bookkeeping, catch up. Be very, very nice to your accounting professional because they're going to be just slammed again with what's going on. But you want to see if you can do anything to help make it easier on your bookkeeper or accountant to get that information collected. If you can qualify based on 2019, great. But again, if you're going for a second loan, it's going to be tough not to have something that demonstrates that 2020 reduction in revenues. And that means your bookkeeping needs to be updated. Loan forgiveness, yes, there is no loan forgiveness for the new PPP loans, both the first round and the second round. And you basically have to spend it primarily on payroll plus allowable expenses. And we do outline those allowable expenses for you. So you want to spend at least 60% on payroll to get 100% forgiveness. Now, my understanding, anything that's not forgiven, so let's say you only spend 40% on payroll and the rest on allowable expenses, you don't get it fully forgiven. There's partially a loan there at the end of the process, but you've spent it all on eligible expenses, then my understanding is that that would be, acceptable, that you have that you've spent it on on eligible purchases by the time you apply for your second loan, not that it was 100% necessarily forgiven. But if you spend it on something that was not an acceptable purpose, let's say you bought a new car for your Uber business, then that's not going to be something that qualifies, and it's probably going to kick you out of qualification for this second round of PPP. Now, we currently have 3 PPP loan applications. Form 3508, that's the long form, the EZ, which is a more simplified form, and then 3508, which is very simplified, the 3508S, which is very simplified for small loans. You may be fine with one of those forms right now if you want to just go ahead and proceed with your forgiveness. If you do want to wait, there will be a simplified forgiveness application for loans of $150,000 or less, and this will apply for all loans retroactively that have not received forgiveness. You're basically going to check some boxes certifying, how you spent the money and that it was necessary for your business to survive this crisis, et cetera, et cetera. So it's going to be a pretty simplified application process. But you don't have to wait if you don't want to. Now, one thing I want to note is that with forgiveness, what you have to do is spend the money that you get in a certain period of time on eligible expenses. And if you do it right, you get 100% forgiveness. The time period is 8 to 24 weeks after you get the loan. So after that loan hits your bank account, you have 8 to 24 weeks to spend it. The first round of PPP was 8 weeks. The second round was 8 or 24. Now it very specifically says any date selected by the borrower 8 to 24 weeks after forgiveness. So you can go 9 weeks or 11 weeks or 12 weeks. If you spend it properly during that time, you can apply for forgiveness. This gives you more flexibility. If you really have a very complicated situation, I would definitely talk to your accounting professional, because remember, this is money that the government is going to give you tax-free, tax deductible expenses that you spend it on. And there's a lot of hurdles and there are documentation requirements, but it's worth it to do it right. Because if you think about it, let's say you get $250,000. Well, if you had a client or you had to make $250,000 in sales, you put in a lot of work for that too, right? So put in the work to do it right so that you can maximize your forgiveness here. Again, the simplified forgiveness process is going to be pretty simple, but you are going to need to retain your records. So it's not like you just check a few boxes, send it in, and never think of it again. You will want to make sure that you retain the records to show that you spent it properly, because the SBA can audit your loan. And there has been a fair amount of fraud that is a concern. So we do want to make sure that you keep good records to make sure that you maximize that forgiveness. And if there's any questions that come up, that you are able to answer them clearly for the SBA. And we're talking a few years out, 3 to 4 years out. So I know this feels like the longest year ever, but I promise you the next 3 to 4 years are going to go very fast, and you're going to forget if you don't keep good records of how you spent it. So keep it in a place where you can access it, where you have a backup, maybe have backup in your cloud storage, so that if it ever comes up, you can just, flip a switch, pull it out, and have that available. We do recommend that you open a new business bank account and keep the funds in that so you can track specifically how you spent it. It's not required, but we do recommend it. We also recommend, if you don't have a business bank account, that you get one and use that going forward strictly for business expenses. That was another problem we saw in the first round of PPP with many self-employed borrowers who just mixed business and personal, and they found it very difficult to figure out what were business expenses, what was personal, how do I qualify? They had trouble qualifying both for PPP and for the EIDL loan or grant, and you just don't want that hassle. All right, to spend the money, to be forgiven, you must spend it on these specific expenses. Remember, these must be business expenses. So if you are someone who is a home-based business owner, Things like rent, mortgage interest, or utilities, they must be things that you normally claim on your tax return, that you can't just suddenly turn it into you can't just write off your rent for your whole apartment and say, well, that's a business expense. It must be something you normally qualify for. And then there are these new categories of expenses that may qualify: covered operations expenditures, property damage costs if your business was impacted in the civil unrest this year and insurance didn't cover it, certain supplier costs, and worker protection expenditures like PPE for your employees. You put up a sneeze guard in the office or in the store that you run, whatever it may be. We've detailed these extensively from the guidance and the legislation in the article that you'll find at nav.com/PPP. So make sure that you check out that full list. Now, many of you are also interested in EIDL. I can tell you that is a very, very popular article on our blog right now as well, because there is a new round of EIDL grants. And yes, you may apply for both EIDL and PPP. And if you already got an EIDL grant and you applied for forgiveness for your PPP loan and they took out that EIDL grant, they're going to make you whole, so that you will no longer have to subtract the EIDL grant from PPP for forgiveness purposes. And if that already happened to you, you will be made whole. We don't know exactly how yet. The SBA administrator, I think, has 24 days after the legislation was enacted to come up with the procedures for that. Might be 17 to 24. But it is coming soon. So just hang tight, but just keep in mind that that's great news. And the EIDL grant also is clearly not taxable anymore. So that's good news as well. All right, so where do you get a PPP loan? You get a PPP loan from a lender who's approved by the SBA to make this. This is a type of SBA loan, and so SBA approved lenders. Now, in the last round, we found that a lot of borrowers had, especially smaller businesses, had trouble qualifying with their bank, or they didn't have a banking relationship, a business banking relationship, and so they had trouble qualifying. So there were a number of new fintech lenders that are used to operating online and making loan decisions very quickly that sprung up to help those borrowers get PPP funds. And in the second funding of PPP loans in 2020, that was a much better experience for many of those borrowers. So just like we did last time at NAV, we're going to be matching borrowers to PPP lending partners who make these loans. So if you sign up for a free NAV account, it's completely free, doesn't impact your credit score. We will alert you as soon as the portal is open for you to apply through one of the lending partners that we're working with. And we will do our best to continue answering questions about applying and qualifying for these on our social media channels as well as on the blog. So, and we also have a great customer service team that does their best to answer questions as well. So we'll continue to try to be your partner in helping you qualify for this type of funding. But the other thing is, I'll just mention real quick, is that when you have a NAV account, you also get matched to other types of financing too. So PPP may just be one step in your recovery or growth plan for 2021. And we want to help you with that process. So there is other relief if you don't qualify for PPP or if it's not enough. And I'm going to just quick highlight these and then we'll go to a couple of questions that we're getting. There is another $40 billion in new EIDL grants. That article is on the NAV blog, nav.com/blog, that details it. That portal is not open yet. We expect it to open January 17th of 2021. Keep your eyes open and read the article to understand what's involved in that, because it's very similar to this round of PPP, whereas where to get the full $10,000 grant, you have to show economic impact and you have to be a smaller or actually business located in a low-income community. Pandemic unemployment has been extended. And just a reminder that if you're collecting pandemic unemployment, you also get PPP. That can affect that. So you definitely want to make sure that you check with your state unemployment agency. I know, I understand this is easier said than done, but check with them to understand whether you can, how that might impact your PPP money during the time that you're collecting pandemic unemployment. SBA loan relief on other types of loans, like if you have a 504, 7A, some other type of SBA loan, they've extended where the SBA will make the payment for up to 3 months for a total of up to $9,000 per payment. And then if you are a disadvantaged borrower, you may get up to 8 months of payments. There's funding through community development institutions and minority development institutions that will be rolling out this year. The Live Venues Grant, this is for businesses. You might be a theater, a concert venue. Just keep in mind, you can't get this grant and PPP this time. You're going to have to choose between the two. If you're a landlord, you want to make sure that your renters are aware of the rental assistance program that may help them to pay their rent to you. I know that's a real struggle. And then the childcare businesses, which may be eligible for up to $10 billion in assistance allocated in the new legislation. All right, what you can do right now, keep informed, keep asking questions. Sometimes we have to refer you to another article that we've previously written that gets into a little bit of the weeds of these programs. We wrote over 50 articles on PPP and EIDL this last year. And so don't hesitate to, ask a question. We'll do our best, but also, read it, try to understand it, and reach out to your financial professionals to see if you need help with getting caught up on that bookkeeping or accounting or understanding whether you qualify this time around. And of course, I'll reiterate, you sign up for a free NAV account, we'll match you with lenders who are making these loans. All right, so let's go to a question we got. I was a subcontractor in 2019, and in March 2020, I opened my own business. Does this apply to me? It might, because as a subcontractor, you were probably a 1099 independent contractor, I presume. You were paid by a 1099, so you had a business, even though it may not have been a formal business, formalized as an LLC or an S Corp. If you filed a Schedule C reporting that income on your tax returns, then my understanding is you qualify. So I would encourage you to go ahead and consider applying as a self-employed individual. And hopefully the businesses are the same. If you start a brand new, completely different business in March 2020, that's a different thing. And I should also add that the legislation or the guidance does point out that if you completely close your business, you're not eligible anymore. But if you temporarily close, you're eligible. So if you temporarily close because you can't see customers, for example, then you may still be eligible, and you definitely want to consider applying to see if that will help you get through this next time period. Right now, the funding and the time period for this is through March 31st, 2021. It's possible that could be extended. It's also possible with the new administration, we could see additional funding for this program or additional funding of different types for small business owners. But in the meantime, we're going to work with what we have, and I want you to get prepared and ready so you can apply with confidence as soon as these loans open up. Now, I also got a question about the documentation that you have to provide when you apply, and generally what they're going to want. Keep in mind, the lender wants to make sure that you are a legitimate business, right? Because they don't want to extend a fraudulent loan. They do have a 100% guarantee, and they can operate in good faith, but the SBA is concerned there has been fraud in this program. So you're going to need your driver's license or a passport to verify your personal identity. You're going to need a voided check for that deposit. And you're going to need documentation of payroll. So that may mean if you file formal payroll, just ask your payroll provider for a CARES Act report. It's pretty simple. They can provide it for you. If you are someone who's self-employed you don't file formal payroll, then you're going to need your tax information. And again, the sooner you can get that 2020 tax return ready, it doesn't necessarily have to be filed yet, but get it ready so you're confident that's what's going to be filed with the IRS. You don't want it to be radically different than what you end up filing, then you can use that information, or again, the 2019 tax return information if you're going to qualify based on that information. So you have those two options. All right, I know this can be very confusing, so I hope I brought a little bit of clarity to this process for you and help you understand what you may qualify for. Again, reach out with questions. We want you to get this money. Okay, how do I record grants in my accounting? I am not an accountant, so I'm going to skip that question, ask you to ask your accountant. Again, the one big question I have after reading the guidance is whether the EIDL grant would be considered in those gross receipts for your business. And I don't have an answer because it was not in the guidance, and I just don't want to assume. I was very frustrated last year that the SBA did not clarify whether, or the IRS really did not clarify whether the EIDL grants were taxable. It wasn't until this legislation included it that we knew that they would not be taxable. Up until that point, as far as we knew, they were taxable. One more tip while I'm thinking of it. Your state may tax things differently than the federal level. Everything that I've been talking about is at the federal level. So you need to talk with your accounting professional to find out whether a forgiven PPP loan or an EIDL grant might be taxable at the state level on your state business taxes. That is a state-by-state process. Some states mirror the federal tax code changes, and others have to adopt changes themselves. So check with your accountant. All right, again, ask questions on the blog, nav.com/PPP. Sign up for your free NAV account. Check our articles out. Stay in touch on these social media channels, and we will do our best to help you get in the process for qualifying for this new round of EIDL and PPP assistance. Thanks for joining me, and I wish you the best for your business.